Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is the weekly wrap. Today, we're going to go over the week that was in the markets and what you can look for this weekend. We're also got an interesting orb trade that's going on right now that I'm watching. We actually have incorporated a trend line. I'm going to show you how to do that real quick. Also, we've got a key level in gold that we're watching very, very closely. And if we do get that early week, I think it's going to be a fantastic way to start next week. A nice little bid on gold. I'm still bullish. I think we've got an incredible opportunity potentially to buy a nice pullback. And then we've also got something for Nvidia. Nvidia is off and rolling. We got that 920 daily. I want to go ahead and go through that and how we may be on the cusp of potentially seeing maybe Nvidia top out. We've got a trade update on the Kiwi. The Kiwi, we almost got stopped out. We're still alive and kicking. We've also got a key level in the Euro USD that we need to cover. So I want to welcome everybody back. It's been an absolute heck of a week. It's been a barn burner of a week. Let's start out with price action right now and just go right to a 15-minute orb trade. This 15-minute opening range breakout, a lot of people really love this strategy. I like it too. I think it's got an incredible amount of potential, but the big thing you've got to remember is know when to trade an orb. An orb isn't an orb, isn't an orb. Every single day is not the same. And I understand when we start talking about using filters and talking about fundamentals and things of that nature, that it gets really tough to understand when to trade these strategies. Most folks just want to get a strategy and they want to trade it and they don't want to worry about anything else. And I don't really have a problem with that. If that's the way that you want to trade, don't worry about it. Me, I'm always looking to make things better. You know, I'm the guy outside under my hood. I'm trying to figure out if I could soup up my carburetor a little bit. Can I get a little bit better performance out of the engine? I'm always thinking of ways to improve. And as a trader, you'll be in this game long enough. You know, in the first few years, you may not. You may just be, okay, this is my strategy, and I'm going with it. Okay. But after a while, if you have the intellectual curiosity that most traders do, you're going to start thinking about ways to tweak things. You're going to start thinking about ways to make things better. This orb strategy is a good one. I'm a believer in the orb. I think that if it's done in the proper context, in the right way, you can make a lot of money trading the orbs. But right now, on a base level, let's use our heads. Base level, it's Friday. We've had huge geopolitical developments in the last 24 hours. The question becomes, is today set up to be a trend day? And essentially, if you're going to play an opening range breakout, you don't necessarily need a full-blown trend day, but you need a move. Is today set up to move? It's going to be really hard. It's going to be really hard, and it'll turn into a function of sort of probably I'm going to be honest with you. If this short trade right here on this orb, if this doesn't cash in by late, I would say the next 2 hours, if you're going into power hour holding this short, you may be on the right side, you may not be, but just remember when all that participation hits in the last 10 or 15 minutes of the trading day, right before 4 p.m. Eastern to 2 o'clock my time, you're going to see absolute chaos, and you may get paid and you may not. Understand the trading day. Understand when the markets are going to come alive and when they're going to go quiet. Understand the days where maybe there's not going to be much of a move. Maybe there's going to be a move. Today, I would much rather be on the short side of this orb trade. And I'm going to go ahead and break it down for you right here. You got your opening 15-minute range, opening bell, ding, ding, US 30 is what we're looking at here. This is a 15-minute orb. Opening 15, and then there's your second 15. That's going to be your orb. Right there would have been your sell. Now, you'll notice it's pretty close to the bottom of your range, but it is closed outside of it. You could have taken that trade, and I wouldn't have said much about it. Something like this, you had a nice initial follow-through in that first 45 minutes, traded down to right around, 42, 158. Now, you see, I drew this trend line, and I drew the trend line right from the top of the U.S. Open. Right, that's the top of the U.S. session right there. That's a New York high, and you're coming down right here. This was a nice retracement, and now we're fighting with this trend line. This third touch, I don't know if you guys saw the third touch trend line reversal strategy. This third touch is everything. Now, right now, we are duking it out. We're fighting with this trend line, this price. We're sort of testing it. We haven't been able to break above it. I'm watching it closely. Remember, if in fact you're trading trend lines, the biggest thing you got to watch is the bar close. Right here, I don't get fooled by tails. Tails and wicks and shadows don't fool me. I want to see a close above that. And then we'll really start questioning the relevance of our 15-minute orb. But right now, I would say this trade is slightly positive. Is it on life support? I would rather be short going into the close than long. And the reason why is global geopolitics. I think we could easily get paid off on this trade. One of the things that you've got is you've got a good solid stop loss right up there above the New York high. And then as far as your key level goes, this market structure right there, this was right around that, I would say the Tokyo low for the US 30, something like that. If you wanted to shoot for the daily low, you could be somewhere right down in here. But this spike low right here is the one that jumped off the chart to me to be a key level. It's not the overnight low necessarily, but I would call that the Tokyo low. And that's a pretty good area to be shooting for here. So if in fact you're short from right up in here on a 15-minute US 30 orb, you're in the money right now. The big question is, are we going to get enough of a move to hit our profit target and make this trade worthwhile? I want to start off with an orb trade because the orb is by far one of the I get tons of questions on the orb. Most people like the 15-minute instead of the 30. I love the 30. Like if you were going to trade a 30-minute orb today, you probably wouldn't have this much of a headache. You'd be right there. Boom, there would be your opening 30. There would be your second 30. So right down there would have been your sell. You'd be a little bit underwater, but still you'd have a pretty darn good trade. But in this case, it looks like the 15 is a bit superior. So we're going to watch that closely as the stream progresses, but I did want to start with a little bit of price action. So good to see everybody back in the room. Mahar, good to see you, sir. I'm new on your channel. Good to see you. Good to see you, Mahar. Welcome. Feel free to subscribe, like, and subscribe, and you'll never miss a video. We've got a bunch of shorts that are going to be coming out here in the few days. Actually, I think tomorrow and the next day. And then we've got a string of videos that are going to be out on how to trade. And also, I like to stream here about 4 times a week as well. Mahar, if you're looking for a broker, be sure to check out Switch Markets. We're going to talk about that in just a second. But these streams are designed to do a few things. Number one, they're supposed to be an interactive trading experience. You ask me any question you like, I'll be sure to get back to you. I'm going to show you trading strategies and trade ideas. I'm also going to recap some of the analytics and the plays that we put out this week because this is the weekly wrap. And then we are going to talk about news because news really is the biggest. I would say this is the biggest news week we've seen in a long, long time. So good to see you, Mahar. Welcome. Always love to see new folks enter the trading room. Okay, here's a trade follow-up right here. We had a buy. Is it time to buy the Kiwi, the NZDUSD? This was a trade idea that I issued a few days back, and it's sort of been a rocky road. We haven't really got much really anything good out of it just yet. We're down about, let's see, the buy was about at 60 even, 6 flat, 600 flat, and we've taken a draw. We haven't been stopped out just yet, and the reason why I say that is because I put on a 1-to-1 risk versus reward ratio on these trades. So if I'm looking to make 45 pips, that means I'm going to risk 45 pips to the downside. Not many people agree with that, but I don't really care. I've been doing this for long enough to where 1-to-1 will get you paid, and it's all about making money in this game. So here's a good look at our level. It was 59.95. I wanted to go in right up there at 60, and you can see that we've sort of sold out down to that 50% level, and our lows down there at about 59.59. So realistically, we were almost knocked out of this trade. I mean, almost knocked out of this trade. 55 would have been our stop loss, and we were just a few pips within that. Now we've bounced up to about 59.73. Not necessarily we're in a decent position. You could probably just take the loss right now, or you could wait and see what happens next week. For me, maybe the worst of it's over for us. Maybe the dollar's going to start giving back some of these gains. But you can see on this Kiwi trade, it's just been a rocky road. This right here would have been where we got long. This initial approach right here. We came right off. We bounced up. We only got about 1 pip love, and then we stagnated right there. This spike low, though, proved to be sort of the weekly bottom, 59.59, and then from there we rallied all the way up to about 60.09, so we were actually in the green right up there, but we really haven't got any bids above 60. That sort of makes me believe that we're going to get stopped out here sooner rather than later, but still, we're about 20 pips off our stop loss, about halfway, so if a person wanted to just reduce how much money or how big of a loss they take on this trade, you probably could just rip the Band-Aid off and take the loss right now. Not me. I want to prove it. I want the market to show me that I'm wrong and that our trade's not going to work. I still like the long side of this market, but our stop loss is going to be right in here somewhere, and we'll see if we hit it. You can see it's been close a couple of times. Perhaps we'll rotate back up. If we get a daily close somewhere right up around this, 59.85, maybe 59.90, I'll start giving this thing a legitimate chance to hit our profit target, which is up here at 60.45-ish. I know it seems like it's a long ways away, but that could actually happen. We just got to get a little bit of solid ground. Is the worst over? Well, I think the worst could be over. We just got to wait and see what happens. MD. Let me see. MD Firdas. Hello, brother. I'm from Bangladesh. Welcome, MD. Always a pleasure to see everybody. We have a truly global community here at How to Trade. We have folks from all over the world. We have folks here from the United States. I'm in the United States, up in the northwest portion of the country. We have folks in here from Canada. We've got them in here really from everywhere, from the UK, from Africa, from the East, from the Far East, from the Middle East, from Australia, really anywhere, South America. Really, we've got a global community, so you're welcome no matter where you're from or who you are. Come on in, ask some questions, and I'll do my best to break down any market that you'd like or answer any question that you like. Remember, this is about the weekly wrap. We're going to go ahead and wrap up the week that was in the market. So this is the story. Excuse me, a little drink of coffee here. This is the story. The Israel-Iran conflict live. Fresh attacks as Trump sets 2-week deadline. That was the big news over the last 24 hours. We went from believing that bombing was imminent. We thought that there was a real good chance that you were going to see U.S. bombing against Iran come. Actually, I expected it last night, as did many in the financial community, and it didn't happen. Trump came out, announced yesterday through his press secretary that, no, we're going to wait. He's going to wait. He's going to think about it for 2 weeks. They're going to figure all the eventualities and things, and they're not going to bomb just yet. So I think that was an interesting development. Right now, you see the markets are very choppy. We're not seeing any directional moves. And the reason why is nobody knows what's going to happen. Nobody knows what's going to happen. Is this a pump fake? Is Trump being deceptive and then he's going to bomb over the weekend? Are they not going to bomb? Are they going to wait 2 weeks? Typically, Trump does what he says he's going to do. So if he says 2 weeks, that means they're at the drawing board right now negotiating, trying to figure out a solution without sending in the big bunker busters. And that really was the attack that's been spelled out in the media was the idea. There's a big nuclear site that's under some mountains in Iran. I forget the name. I've heard it a million times over the last 12 hours. But the idea is that the U.S. was going to hit it with some bunker busters. The problem is they don't believe that one bunker buster can do it. It's going to take upwards of 5 or maybe 10 of these things. The B-2 bomber is the only plane that can deliver it. I know we had 2 scrambled and in the air yesterday, so we thought that strike was coming last night, and it just didn't develop. So I don't really know what to say at this point. I think that we're going to eventually see some sort of action from the United States against Iran, but it may not be military. May not be military. I kind of expect maybe a deal. Trump, I could see where this type of brinksmanship would set the stage for a nice deal. You just don't know. You just don't really know what happened yet. Let me see, MD, what's your indicator you use for analysis? The basic indicators I use is going to be Fibonacci retracements. We're going to cover a lot of strategies here, though. In this trading room, we're going to actually look at the 920 today and that opening range breakout's what I started with. Treehawk, good evening, Shane. Great to be joining you. Good to see you, Tree. Welcome. My indicators are simple. Really simple. Fibonacci retracements, most current spike to most current spike. Very easy. I can draw a few for you if you like. I have the Bollinger Bands going. That shows me price elasticity. I don't really talk much about Bollinger Bands because I don't trade them. I use it more just to discern market state. And then I use a 13-period EMA, which is my bread and butter. I love the 13. And then my Bollinger Midpoint, which is actually more important than the Bollinger Bands themselves. So this was another trade idea that I wanted to update right here. This was from earlier this week, Euro-USD support zone in view, a weekly support zone, and we were looking to buy 114.25 as well. We didn't quite get it. I mean, you can see the sell-off came down to about 114.46, so we're about 20 pips off there. I'm still locked and loaded, though, from 114.14. This trade idea will remain active until we get it elected, or if we get it elected. But somewhere right down in there, I like that 114.25 bid. I'm still bullish the Euro-USD. I'm still bullish anything really against the U.S. dollar. The U.S. dollar has been getting absolutely murdered this year, absolutely murdered. And to step up and take a position on the U.S. dollar at this point, I would do it in the short term. I would do it scalping. I would do it intraday trading, maybe even day trading, but I wouldn't do it swing trading, and I darn sure wouldn't invest my house betting on the dollar right now. So I'm very, very skeptical of what we're going to get out of the USD this year. I think that there's a lot of scenarios. If you do see the U.S.-Iran hot war develop, most people believe, including me, I went over the Strait of Hormuz yesterday, and I've heard that a lot in the media. A lot of folks think they're really breaking news there. No, the Strait of Hormuz is the mouth. I mean, that is the choke point of the Persian Gulf. Then you can shut off all those oil tankers and oil exports out of the Persian Gulf, and you can do it right at the Strait of Hormuz. And if you do that, you shut down about 20% of the world's daily barrels. Daily barrels of oil go through there, about 20% of the world's supply. So you're not going to be able to make that kind of loss up, and that's going to do what? I mean, even if we just think about it simply, for U.S. oil, what are you going to have there? U.S. oil is right around 73.45, so 20% of 73, I don't know. What would that be? Probably add $20 to price, something like that, $25. Big round number for me would be about 100. About 100 is probably what we would test if that Strait of Hormuz is shut off in the event that the U.S.-Iran get into war. So I'm talking about oil right now. Why am I looking at a Euro-USD chart? Because it's going to dictate everything. I mean, I've heard a lot of people in the media just going on and on about what they think about oil and this and that and the other. I will tell you for a fact that if oil prices go to 100, you're going to have a real problem keeping consumer prices down. CPI is going to start ticking higher, and instead of rate cuts, like we're expecting out of the Fed, probably in September, they're going to be talking about rate hikes. If that's the scenario, you are going to go into a recession. I almost guarantee it. We've already got one quarter of negative GDP. My guess is if that happens, if you see a hot war develop between the Iran and the U.S. right now, you're going to see a bad Q2. Towards the tail end of it's just going to be brutal. You're going to see that. And then you're also going to see rate hikes instead of rate cuts. Now, theoretically, that would help the U.S. dollar. That would make the U.S. dollar stronger. Well, right now, that's not the way things are working. It just isn't. We're talking about no rate cuts. We expected 4 or 5 this year. Last September on the dot plot, we've got 0 in 2025, and the U.S. dollar is still losing puff. Shane, why is the dollar so weak? A lot of hypotheses. I will tell you mine. I believe that people are dumping a lot of T-bills on the market. They're getting rid of their government debt. And I think the primary holder of government debt was China. I think you see a lot of Chinese institutions. I think you see the Chinese government itself dumping T-bills like they're going out of style. And what that's doing is indirectly increasing the money supply here in the United States, and that's driving the value of your dollars down. The other thing I'm going to say is this: the tariffs and the trade war. A lot of folks got sour on that. A lot of international money got sour on that and said, fine, we don't want dollars. They're holding other things. Well, right now it's working out. So that's what I would say about the dollar. I do expect it to rebound, but I'm in no hurry to bet on it. I'm just not. But this Euro USD, our zone right there, our happy zone right there on the weekly, I really like that area. I think that you got to be looking to be a bidder at 114.25. I think that's just a great buy. I really did think we were going to get it earlier this week. We just didn't get it. That right there is where we should have got it. Should have got that test, and instead of failing at 114.25, it failed at 114.46, which is right around that 114.50 handle. So for me, I take a look at something like that, and I go, well, what does that mean? And I go, well, it means that we've got a little bit of bullish pressure here. With a bit of luck, this aerial setup is just a fantastic rotation zone. And if, in fact, that's the case, then we're going to make a lot of money bidding 114.25s. I like it. I like it a lot. I think we're going to have a chance there. So that's what I was looking at on that Euro USD trade. We got one more trade idea that I want to cover, and it's the one that's live right now. I mean, that one's live too, but this one we've got a shot at. And this is gold. Everybody loves gold. The Philadelphia Fed's going to be our fundamental of the day. I'm going to walk through the Philly Fed. I'm going to talk exactly what it's all about. But before we do that, gold. If you're not trading anything else right now, you probably should be looking at gold. I had another great trade on gold today. It's been just a huge week trading gold futures for me. A very, very good one. I think I'm going to put the feet up, maybe go get a steak tonight and relax, maybe a nice 12 to 14-year glass of scotch or something, because it was a good week. It was a long week. It was a good week, and I was very, very happy with the way that I performed trading gold this week. Now, how can we trade it next week? Well, 33.25 is big. And we put out a trade idea right here that's going to be 33.27, and it's going to be a pretty good trade. So this area right down in here, you'll notice I'm working weekly charts. That's because there's a lot of volatility, and when our anchor points come into play, boy, we have a chance to really just knock the heck out of these markets. And so if we get a nice pullback sell here, maybe a little sell-off to start the week, we trade down from maybe a 33.70 close, something like that, right down to about 25. We've got a real good chance to get that trade probably for $5 or $6. So I would be watching that closely. I think the entry point, it's on the trade idea there. If you want these trade ideas, go over to howtotrade.com, click on me, follow me, and what will happen is these will be beamed out to your inbox right away. So you want to check that one out. That's a pretty darn good one. 33.2750, I believe, is the entry, or our key level. Excuse me, it's not our entry point; it's our key level. But you're gonna want to be in there. You're gonna want to look at that. That's a pretty darn good one. I think that you're gonna have an opportunity there, maybe to make a few bucks. Love that. I love this down here, 32.50. I mean, if the rubber really does hit the road, and maybe we have a peace deal, and maybe, I don't know, we're going to hike interest rates and get the big correction out of gold, then the back end of the golden zone, 32.50, 32.47. You'll notice my 13-week EMA is right there as well, 32.45. That will be the level of all levels down there. That'll be a support zone that really will define the current bullish trend. Love it. I still love 38% too, though. I like to trade 38% and 62%. I also trade 78%, and I do not touch 50% with a 10-foot pole. Something to think about there if, in fact, you're interested in trading gold. Now, remember, if you want to trade any of these trade ideas, be sure to check in with the Switch Markets. Go over to switchmarkets.com, open up a free demo account, maybe even fund an account if you're interested. Lots of things you get with a Switch Markets account. You get, with a funded account, free access to Algo Builder, algobuilder.com. That's going to give you a chance to build your own trading systems using AI. You're also going to have an opportunity to use Pine Connector. Pine Connector is going to be one of those where you can connect your trading view to the MT5, which is supported by Switch Markets, and place your trades that way. It's really going to be a lot of value coming your way. We're also developing a nice blog over there. We're doing live streams over at Switch Markets with actionable trade ideas, and also Q&A, a live Q&A with myself. So you guys, there's a lot of value that's going to be coming online at Switch. There's a lot already there. So if you're interested and you need a broker, go ahead and check that out. Okay, for me, the game is psychology. The game is absolutely psychology. If you're going to be a trader, your psychology has to be there. You've got to have a trader's mindset. You've got to be thinking like a trader. And the way that traders think is they think about money. Now, if you don't like thinking about money, you probably shouldn't be a trader. A lot of people will disagree with me. A lot of professional traders will say, hey, I just like looking at the charts and my analysts. I don't even want to think about the money. And I said, yeah, you don't have to think about the money necessarily on a per trade basis. You assign your risk, you take the trade, and you let the thing play out. But you've got to think about making a living at some point. I don't know any traders that don't say, okay, well, how much money did I make this week? You really need to be in that kind of groove thinking, okay, what did I make this week? It's all about momentum. Markets are all about momentum. And one of the biggest things I've found over the years that kills my momentum is losing money on Fridays. I hate it. I absolutely hate it. If I sat there Monday through Thursday and I put up a nice week, this week was a very, very nice week. I came in this morning conservative. I had X amount that I was going to risk. I put it out there. I hit, made some money, and I said, wow, this has just been a great week, and pretty much hung them up. Now, there's a couple different ways you can trade Fridays, but you got to be cognizant about what you're trying to get accomplished. Everybody's goal in here, unless you're a gambler or a hobby trader, and if you're either, that's great. A lot of traders will sit here and they'll look down on gamblers. I won't look down on gamblers. I am a gambler. I gamble on sports. I go to Vegas and play blackjack and roulette and all that stuff and have fun. I have no problem with it, but gambling is a form of entertainment. So if you're looking to the markets for that entertainment, okay, great. Best of luck. I hope you win. I really do. I'm pulling for you. I want you to pull out big chunks of money out of the market and then just be a great, great gambler. There's nothing wrong with that. But if you're in this for the long haul and you're not seeking thrills and you're not seeking entertainment and you want to be here and make a living, you've got to understand that the days and the weeks and the months, they add up. And every dollar that you lose, you have to make back. So, No Donation Friday. What is No Donation Friday? This is how I handle Fridays. A couple of days a week that taught me some severe lessons in my first few years of trading. Number one was Monday. I found myself being too anxious to trade. I'm coming off the weekend. All I'm thinking about is the markets. I want to trade. And what happens? I come out and I get into a hole. I spend the whole week digging out of the hole. Well, on the flip side of that coin is Friday. I spend all week busting my tail, making money, doing the analytics, executing the trades, really working hard. I mean, if you don't believe trading's hard work and you're trying to do it every day for a living, then maybe you're just gifted and it's easy. This is an exhausting, tough business. So when we roll into a Friday and we've got $3 or $5 grand on the board and we've made our money, it's absolutely imperative that you take some of that home with you for the weekend. So here's how I do it. If you're having a winning week, you take at least 50% of your profits home with you. If you made $500, you take $250 and you put it in your pocket. Get ready for Monday. That's paying you for your time. Respect your time. Pay yourself for your time. Number two is a losing week. Now, if it's a small losing week, trade it as usual. I don't have a problem with that. If you're trading week, if you've lost a little bit of money, let's say you're down, $100 or $50 or $200, and you say, I've won some, I've lost some, I'm still in it. I can still make this a winning week. Then I say you just trade it as usual. But if it's a big losing week, and I had one of those not too long ago, hung them up, and I said, I'll see you Monday. Now, why? If you're having a big losing week, you got to consider waiting till Monday. Don't trade. Don't trade because it's not going to get any better for you. You're not going to step into a Friday scene and make back all the money you lost during the week and then hit your profit target. You're not going to do it. Odds are, you may do it every now and then, but odds are you're going to go deeper into the hole. Now, think about what's going on in your mind and with your system and your strategies. If you've lost a lot of money in a week, what's going on? Number one, you're getting your tail kicked. Now, there's a couple of reasons why that may be happening. Number one, you may be just making mental mistakes. You may be over trading. You may be letting fear and greed just pull you all around the market. You may be chasing price. You may just not be trading well. Okay, that's fine. Number two, maybe your strategy is not performing well. Maybe you're trading orbs and this has just been a horrible rotational week and you don't even have a chance. Well, if that's the case, either way, you need to shut it down. Quit. Come back Monday. The best trading day is always tomorrow. The best trading week is always next week. Remember that. And if you're neutral, let's say you're right around scratch, zero, maybe you're a small loser, maybe you're a small winner, maybe you're at exactly zero. Trade as usual. You can reduce your leverage or don't trade at all. For me, if I was at neutral, I would say, okay, I've won some, I've lost some. I probably would just trade as usual. It would depend on how many trades I'd taken and if I'd been trading all week. Now, maybe I'd missed all week. Maybe I'd been out for 3 days and I roll into Friday thinking, do I want to trade today? If you miss days, if you're on vacation and you come back, I always like to be in the saddle a day or two before I start taking trades. But maybe you got back on a Thursday and you want to trade on a Friday. I don't have a problem with that. So if you're neutral, then it's up to you. That's psychology. That's what keeps you in this game for the long haul. Now, let's check in on our orb trade. Here's our opening range breakout. And you'll notice that trend line worked like a charm. You had a nice sell-off there, and then we came in. There's your entry point on this opening range breakout. That's our opening range. Everything in red's our opening range. Came back. There was our pullback, deep pullback into that range. Came back. There was another pullback. That's your third touch. Now we're starting to go. Now we're in position to where we may be able to make a little bit of money. Our profit target's still way down here at that overnight low, 41,963, and right now we're at 42,198. So we're still a ways down here to get paid off. But take a look at what kind of risk versus reward you have. 42,442, and you're in there at 42,278. So you're risking about 100. What are you risking? About 100 and give or take 70 points. I'm just going to go with that. 164 points. And then what are you looking to get on the downside? You're looking to get a lot more than that. This is about a 1 to 2, maybe a 1 to 2.5 trade. And right now it's breaking positive for you in a big, big way. You're up about 100 points on this trade since entry. I mean, if you want to trade a 1-to-1, your profit target could be right up in here somewhere. This is sort of what I favor. Down here, somewhere during the overnight low, you could leave that as a target as well. This is a pretty good example of a strong opening range breakout on a day where we just have not done anything. This is not a trend day at all for U.S. equities. We are absolutely flat. But right now, we're starting to look like we're getting some momentum. We may be able to wash out that New York low and make a run at that key level. Not bad. Let me see, MD. Very soon we will see you as a successful trader on social media. No, I'm not really on social media. You can check me out it's ShaneV_trader on X. And then we've put out just an absolute ton of YouTube videos and shorts, but you won't be seeing me driving around in Lamborghinis or on private jets or wearing big watches. I wear my Fitbit. I mean, I get laughed at too for my watch. I know my wife always flips me static. She says, Shane, you got nice watches in there. Why don't you ever wear a nice watch? And I go, well, I'm always monitoring, my Fitbit. I'm monitoring my heart rate. I'm monitoring how many calories I burned today, how many steps I've taken. I've got it all right here. I like to have my heart rate under control when I'm trading. So it gets a little bit elevated from time to time, but, I've never been a Rolex guy. I've never really wanted one. Don't care. The Tag Heuer makes a nice watch. Those are nice. And, I got a nice Movado, but you're never going to see me on social media trying to be a baller on a private jet or driving around a new car. You're not going to see it. Believe me. I live in Dillon, Montana. It's an agricultural community. About as fancy as I get. It's a cowboy hat and a shirt with a collar. That's about it. So, MD, you probably won't see me on there as a successful trader. We have been in Business Insider a few times, though, so if you Google that, you can read some of the articles there. But this orb's really coming our way now. Interesting stuff. We'll see if this one holds. Okay, I wanted to go over a few things fundamental-wise. I know that fundamentals aren't really what people want to do, but it's important to take a look at something that developed earlier today, Philadelphia Fed survey. This basically is a good look at the manufacturing in the tri-state area, the Northeast. And what we're seeing is just a contraction in the manufacturing sector. You can see we were expecting a negative 1.7. It came in at negative 0.4, well beneath expectations. The Philly Fed employment, though, this was the lowest, this negative 9.8. Was way down from 16.5, and I get it. These are academic numbers. They don't mean anything by themselves. You have to compare them to something, or else they're completely useless. The biggest thing that I would point out here is what I read earlier. Philadelphia Fed Employment Index came at negative 9.8, and that really was the headliner. So you see all this stuff. This is the actual, this was from the Bank of Philadelphia, but here we go. This is the key. Notably, the employment index dropped into negative territory, hitting its lowest level since May of 2020. Whoa. May of 2020. Does anybody know what happened in 2020? That was COVID lockdowns. That means that according to these Philadelphia Fed numbers, manufacturing's in big trouble. Big trouble. So be very careful when you start betting against me saying there's not going to be a recession. I'm never going to let that go. Melinda came on here and just blew me up, said, Shane, I'm quitting. I'm not subscribing. I'm out. I'm never coming again. There's no recession. And I go, well, you already got one negative quarter. Now you're seeing major downturns in a lot of these metrics. I mean, it may be a quick recession, but it still could be a recession. And here's a good look at this. -3, you're 3 months in a row. Nice bounce back from April there, but you're still in negative territory. Is the Philadelphia Fed a big deal? It used to be a huge deal. It's not so much anymore. Used to be a big one. It was a 5-star event. I remember trading it. I was trading the Euro FX futures, and we were always on the lookout for the Philly Fed. Always on the lookout. All right, this is a good look at Nvidia. Nvidia is one of the big movers and shakers today on the U.S. stock market. It's off about 1.45%, and you're seeing a little bit of a pullback. Harry, I was here for that. Yeah, I've mentioned it like twice this week because I want Melinda to come back and argue her point. It's starting to look like she's going to lose. Hey, listen, I hope she's right. I don't want to be in a recession. That's the last thing. I lived through a bad one. 2008 to 13 was probably the worst professional time of my life. It was bad. Unemployment in the United States was over 9%. It was ugly. So if you guys lived through that, I feel you. But if you're too young and you don't remember that really good, I'm glad. You don't want that. That's like PTSD. You get PTSD from stuff like that. You really do. All of a sudden, you find yourself socking away money and putting it under your pillow and stuff. In any case, this is a good look at Nvidia. Now, the reason why I brought this up is because this is our 920 EMA crossover coded, and this was a bid. We've covered this before, but this was a fantastic bid right around 112. Just a good investment, really. 112 up to 143. I mean, you're crushing that about, 38%? 40% gains in just a few weeks. That's absolutely fantastic. What are we thinking now, though? If I was in that trade, I would have already taken it. You can't argue with a 40% payback in just about 6 weeks. If you're looking for a double top right up there, maybe 152.99. I don't know. I'm starting to think we're going to see some profit taking here from some of these tech shares, especially if war does break out and the United States gets drug into something more prolonged. This right here is what we're watching. Now, we've got this coded. This was a video that we have over at How to Trade Com, and it's on YouTube, and it shows you exactly how to code this and develop a strategy like this. But we've got really a 9 EMA and a 20 EMA, and the shaded area in between it is really our trend indicator. The greater that shaded area is, the stronger the trend is. And right now, this is a fairly strong trend, but we're starting to see price action flatten out. If, in fact, we do get that cross under, get that 9 to cross under the 20, you're probably going to be in pretty good shape for a potential short, or at least to take some profits. So watching Nvidia closely there, I think that's a pretty good one. All right, guys, I'm going to go ahead and give you my own personal analysis on U.S. oil because it will be a big-time mover and shaker over the weekend. Let's go. Here's the Kiwi. Let's just get right to U.S. oil and talk a little business. Now, 30-minute chart. This is important. I had every intention of trading WTI crude today. Every intention. Showed up. I did my range numbers. I did all my work, and I said, okay, it's time to trade. But I want everybody to understand that this is really a dead market right now. And the reason why is nobody knows what's happening. Nobody wants to go long. Nobody wants to go short. That right there is about 9 a.m. Eastern. And that's the sort of the beginning of the WTI crude traditional pit session, traditional pit NYMEX session. And you can see sort of volume. We had decent volume there, but volume sort of picked up over that up and above what we saw during the overnight. So that right there is when I trade WTI crude, and I'm looking right through there, and that range, this type of stuff right here, that's what we call a barcode. I don't know if anybody's ever seen a barcode. I'm sure you have. Let me see. I got a pack of bubble gum here. Maybe you can see the barcode. This is what a barcode is. See the code on it? That's how they identify the product. That is a barcode. What is a barcode? It's just a series of lines. There is no directional move. It is Chop City. I call it a picket fence. That right there is how people get their money taken from them. Think about it. If you're trying to play any type of breakout or trend following strategy, you're losing. This is ugly. This is nice little break, and then you rotate back, and we're just trading inside of what I would call a phone booth, 72.80 to about 73.80. That's about $1, but the majority of this trade has taken place right around 73.50. In my view, my own humble view, that's untradeable. You look at something like that and you don't want any part of it. You don't want to get involved in markets that really have no direction, no rhyme, or no reason. Now, if you wanted to trade it, you'd say, Shane, how would you trade it if you absolutely had to trade it? And I would say, well, I would be trading rotation. So I'd be looking at this New York low, this low right down here, right around 72, 75, somewhere right in there. I'd probably be buying 72.80s, play rotation, something like that, and look to scalp 5 ticks to the top side. That would be my game plan. Is that even worth doing? Is that even worth showing up for? In my view, no, it's not. No, it's not. I'm not even remotely interested. So WTI crude right now, intraday, man, you don't want any part of that. In the trader's handbook, something about a 20-foot pole. Don't go near markets like that unless you've got a key level, a key macro level, and maybe a rotational strategy that you can play off of. You don't want any part of that. Now, what we do want to do is we want to take a good look at what's happening with price action. So this right here, there's your low, is going to be 60.06, 59.84. That's your nice spike low. So that's where I'm going to really base all of my decisions on, is this spike low, this little doji sort of there. I'm going to go from that spike low to that spike high, and then we're just rocking and rolling right there. There's your pullback, 50%. So going into next week's trade, am I bullish or bearish WTI? Most people are bullish, and I do have sort of a bullish bias because of the geopolitical situation. However, I would officially, like if I was on TV right now, I would say I am neutral. I am net neutral because right about the time you decide to hawk your house and buy a bunch of this stuff, buy a bunch of WTI thinking that the United States is going to do something and crude oil is going to go to $100 because Iran's going to shut down the Strait of Hormuz and yada, 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 it doesn't happen. I told the story the other day about my uncle and his biggest loss ever when he was trading for Shell Oil. It was a pretty good one. Check out one of the past streams. They bet a lot that in Gulf War I that the Iraqis were going to line up at the border and they were going to have a hell of a fight with U.S. forces. And that resistance, even if it was just for 12 hours or 18 hours, was going to provide a big-time spike in the crude oil market. It didn't do it. They didn't fight at all. They just surrendered. Crude oil crashed. It didn't rally, and he took one of the biggest losses he ever took. Well, okay. Do we want to set ourselves up for that same type of thing? Because I'm telling you, listen, if we buy it, let's just say we roll in here with our 25 or 50 grand and we say, okay, I'm just buying 73s because the U.S. is going to do something this weekend. You may be right. And if the United States does launch the bunker busters and if Iran does retaliate or if something crazy happens, then yeah, WTI crude's going to go to $100 and you're going to probably just retire and be very wealthy. On the flip side of that coin, we are starting to see Trump slow his roll on the war drums. You're starting to see negotiations. And remember, Trump's the master negotiator, supposedly. He's the art of the deal. And it could easily be said that early week brinksmanship was just that, a negotiating tactic, a way to get Iran to toe the line. Well, the terms are unconditional surrender. Does Iran ever do that? They may say they do, and that may be good enough for the world's community. I don't know. Very, very fickle situation. European leaders and Iranian leaders are meeting in Europe right now, negotiating the terms of whatever deal they're kicking around. What could happen? I won't even venture a guess. I don't know. So if we bought and nothing happens, maybe we get a peace deal. Maybe who knows? Maybe we have Iranian diplomats at the White House and everybody's pressing palms. That's probably going to crash crude oil. So in my view, it's a big-time risk to try to put this trade onto the long. I would much rather fall back on my technicals. I would be a bidder Monday. I would be a bidder from 70.80. I would be a bidder from 66.62. That would be an absolutely beautiful trade in 63. Do we get that big $10 correction? I don't know. I don't necessarily believe that to be the case, but I don't know that to be true. But for right this minute, I do think that I would be more than happy to play off that 70.80 to the long. Do I want to sell right now? No, I don't want to get caught holding shorts. So I don't really want to be long. I don't want to be short. I want to do what everybody else today is doing. And believe me, hey, listen, these ideas, they're not original. Everybody on Wall Street right now is doing this with WTI crude. Not a damn thing, because they don't know what's going to happen. It's just the way trading is, guys. If we don't know, we can stay out. We don't need to get in. Let me see. GTA Ambassador, Grand Theft Auto Ambassador. How you doing? Good. T. Marine, I missed the top of today's session. Happy Friday, all. No worries, T. You can just catch it on demand. The big trade we stalked right at the beginning was this orb trade, 15-minute US 30 orb. Boy, it's starting to look pretty tasty now, isn't it? Looks like we're going to actually get a bit of a move. Well, we have to trade down about another, 50 points, something like that. 95 and 50, so about another 140 points. That would take us to about a negative 200 here in the Dow. And I don't know that we get it, but you can see this trend line developed beautifully. We didn't get the bar close above that trend line, so those trend line reversal rules weren't not in effect. This trend, that third touch, guys, always remember this. If you're using trend lines, and there's a lot of folks out there that are a lot better than me. There's one. Oh, come on. I'll figure out how to use this one of these days. There's two. There's three. Right there. The third touch is always the biggest deal with trend lines. Two points, 2 price points. You can build a trend line. The third touch, the third test of that is either going to be a breakout in a reversal. In this case, it would have been a bullish reversal, a reversal of the bearish trend, or it's going to act as topside resistance or downside support. That right there acted as topside resistance. Don't get faked out. Remember this with trend lines. Don't get faked out by tails. We don't get faked out by tails. We don't get faked out by shadows or wicks. Things got a little wicky in there. We've got to see a bar close above that to start believing that our trend line's dead in the water. Check out the trend line reversal video if you haven't already seen it over at How to Trade Calm. Not many people watched it. I thought it was a pretty good video. It gives you a good idea on how to maybe trade trend line reversals. Me, I'm not a trend line trader, but a lot of folks make a lot of money trading trend lines. So, there's only a couple rules on this stream, and those of you that have been watching know. I mean, if it makes money, it's the right answer. I don't care what it is. I don't care if you're trading by lunar phase. A lot of folks show up, they say, okay, it's a new moon, I'm going long. Okay, it's a full moon, I'm going short. I don't care. If it makes money, do it. I mean, we can flip coins. We can flip coins odd or even. 1, 2, 1, 2, odd or even. I don't care. It's just got to make money, and it's got to be consistent doing it. The horizontal support and resistance levels are the way that I've been able to hold on for all these years. Not saying it's the best way, but they make sense to me, and that's genuinely what I build my approach on. All right, guys, I've droned on long enough. Each one of these streams gets longer and longer this week. I don't know what it is. I got too much energy, too much methylene blue, too many supplements. All right, I'm going to go ahead and sign off here for the weekend. Next week's going to be interesting. The schedule will be up here in the How to Trade trading room momentarily. I just got to figure out exactly how we're going to attack next week and how we can give you guys the best coverage. If you have any questions at all, be sure to swing by the How to Trade trading room. Send me a private message. I'll be sure to get back to you. We'll get that up and running. I answer everybody pretty much within the same day and usually within just a few hours. Let me see. T. Marine, I'm a trend line trader because I swing trade. Nothing wrong with swing trading. As a matter of fact, if you want to have a good life and less stress, be a swing trader. Be a swing trader. I'll tell you what, there's swing traders out there that make bank. They make a lot of money. Me, I've just been a scalper for so long. I like loading up the leverage, and I like getting in and out. Today I was in the market for all of about 30 seconds, something like that, and had a real nice trade in gold. Played a 13. I played the 13-day EMA. I'll show you the trade I made. Why not? All right, gold futures right here. Let's go right to, let's see, what do we need? We don't want that on the orb, though. We're going to go right here. We're going to go gold futures. We want the daily chart. Okay, so you can see exactly what's developed here. Really choppy, doji type of markets. This was a beautiful thing the other night. This is pretty good, too. This was nice today. So, in this type of environment, what can you really do? It's a tight range. We should still be opening up looking to make more range here, but we're not going to do it today, I don't believe. We're almost at noon my time, about 2 Eastern, 1:45. So something like this. So what was the trade? Well, the trade was relatively simple for me. 30-minute chart. I was watching relatively closely early today, and what I basically the entire premise of my trade, and let's go ahead and mark this, make this real easy, was I wanted to sell that moving average on the comeback, and it was somewhere right around 82. Yeah, right there, 33, 82, 9, somewhere right in there. And so we came back down to your intraday time frame, and I said, okay, I got my daily moving averages right here. So right there, bang, there was our big move, and that was right on the U.S. Open. So you see, Shane, how'd you win that trade? How'd you win it? Well, let's take a look. I was only looking for 10 ticks. That's all I wanted. That's all I wanted out of it. I just wanted a little bit of it as a sell, We weren't really moving, and we're not moving. I mean, I guess I could have stuck with it and just bought it the rest of the day. If I would have done that, I'd probably be up about $1,000 or $1,500. Didn't really care, though. This move right here was the move I wanted. Why? Because there was a lot of volume in the market. It was right on the U.S. Open, a lot of pricing elasticity, and there was our level, so right around 82. So let's take it down to a 1-minute chart and see exactly what happened. I know we're getting in the tall grass, but this is sort of what I've found to be true over the years. So where's our trade? There it is, right there. 7:45 a.m. Eastern time, or excuse me, 7:45 a.m. my time, 9:45 a.m. Eastern, and I'm looking to sell right there. What am I looking for? I just wanted 10 ticks. Not really much. I think I ended up getting 11 on it or something. But, 33.82.8, and then what's the low there? 33.81.4. Winner, winner, chicken dinner. So we had a trade I was in for all of about 30 seconds. My leverage was significant, so this trade right here paid me my daily goal, and I'm done. That's it. There's no more fuss, no muss, no reason really to work. These are trades I should have taken, no question about it. That was a bid. Price breaks above the moving average, comes down. You're off of that daily. This is the daily moving average. Now remember, guys, that white line, that's my long-term anchor point. Comes back down, bang. Comes back down a little bit of stagnant. Boom, get a little hammer right there, bang again. You could even have got in down here and hit it again and again and again. So my point is this. When you find a long-term anchor point that's in play, you can do good work with it on short time frames. So when I'm showing you daily charts and weekly charts, it's not just like, Shane, you trade dailies and weeklies. No, I don't. That's the template. That's the roadmap. I mean, it's no different than going and getting on the freeway and driving to the next town. That's how I'm getting to where I'm going. And that was my exit. It was right there. I hit it. Boom, 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 done. Is that the best way to trade? No, probably should have stayed in there, leveraged up, and tried to turn today into a monster day. Didn't need to, though. Don't have to do that. A lot of stress comes with that. Didn't want it. Had a good week. Didn't want any more stress. It's time for the weekend. All right. Thanks again, Shane. Enjoy your weekend. Absolutely, Harry. You have a great day. T. Marina, you inspire me to be a scalp swing hybrid. I don't know, T. I mean, if you're making good money being a swing trader, I would just be a swing trader. That's for sure. I would just be a swing trader. All right, everybody. I'm going to go ahead and sign off for right now. I'll have that schedule up for you momentarily in the How to Trade trading room. Should be interesting. I just got to wait and see exactly what we're going to do there. Other than that, big news cycle this weekend. It's all about Israel, Iran, and the United States. And I won't even venture a guess on what happens. Things are starting to look like a deal. And I got to tell you, 48 hours ago, that did not look like it was going to happen. I figured bombs would be in the air by now. We'll see. It looks like cooler heads may prevail. Who knows? All right, everybody, I'm out. Lita, you're absolutely welcome. All right, everybody, I'm going to go ahead and take the weekend off. You guys have a fantastic weekend break. If you made money, congratulations. If not, come back Monday. We'll make some. You guys have a fantastic weekend. Trade the action well, and we'll talk soon. See ya.